Ladies and gentlemen, good day and welcome to the Q3FY22 Earnings Conference call of IFB Industries, hosted by Nirmal Bang Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mayank Bhandari from Nirmal Bang Institutional Equities. Thank you, and over to you, sir.
Thank you, Stephen. Nirmal Bang Equities welcome to you all for FY22 results conference call of IFB Industries. Management is represented by Mr. Prabir Chatterjee, Director and CFO, Mr. Raj Shankar Ray, MD and CEO of Home Appliance Division, Mr. Arup Das, Head of Marketing and Engineering Division, Mr. Anand Reddy, CEO of Motor Division. I now hand over the call to management for opening remarks, post which we can take questions from participants. Thank you, and over to you.
Thank you, Mayank. Good afternoon, everyone, and warm welcome to all the participants for IFB Industries Investors Call for the third quarter FY22. Let me begin by wishing everyone a very happy New Year. Hope all of you are safe and healthy. Joining us today on the call is Mr. Raj Shankar Ray, MD and CEO of Home Appliance Division, Mr. Arup Das, Head of Marketing Engineering Division, and Mr. Anand Reddy, CEO of Motor Division. I'll now start with the third quarter result. During the third quarter, the company reported a total income of 923 crores, which is at the same level of at last year, as there was no growth in sales during November and December. Q3 was quite challenging for the company due to slowing domestic demand and unabated cost pressure for material cost increase. Gross margin was significantly affected as material costs continued to increase. EBITDA for the quarter was 30 crores with a margin of 3.25 compared to rupees 114 crore during the same quarter last year. For the period ending 31st December 2021, the company reported a total income of 2,433.23 crores with a growth of 27% over the corresponding period last year. EBITDA for the year was 74.04 with a margin of 3.0%, which is significantly lower because of very high increase in material cost due to commodity price increase, which still could not be passed on to customer entirely. Similarly, operating expense was also higher during the year. With this, I will request you to start the question answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aviral Jain from SG India. Please go ahead. Mr. Aviral Jain, your line is in talk mode. Please proceed with your question.
Yeah, good afternoon. Thank you, everyone. Thank you for giving me this opportunity to ask a question. So I had two broad questions. As in from a 3 to 5 year perspective, what is the glide path for each of the divisions, namely the Home Appliances Division, the Engineering Division within which you have the fine blanking and stamping division as well as the Motor Division. So what sort of revenue scale on a normalized year, say FY25 or FY26, 2.5 years from now, is where do you see the platform growing to in terms of sales? And what would be the stable margins given a lot of investments have been made into internal manufacturing, including AC manufacturing and also presses on the fine blanking side. While this quarter may not be it's definitely not reflective of long-term margin trajectory for the business. But the question is more about 2 to 3 years from now and how the revenues would scale up in each of the divisions and margins thereof on an EBITDA level.
You said you had two broad questions. Is this covering it?
Yeah, the second question was around the inventory accounting. So, does the company follow FIFO method or weighted average inventory cost method? Because the kind of gross margin compression we've seen on the EBITDA margin compression is not led by input price pressure, and a lot of it could not be passed on. So those were the two broad questions I had.
Okay, so I'll answer the first one, and then Mr. Chatterjee can take the inventory accounting question that you had. If you look at a 3 to 5 year horizon for the appliances division, then as far as the revenue under a stable condition is concerned, there are 2-3 levers that we have for the revenues to be in line with what the potential is. Now, the first one is the air conditioning segment, where the investments that have been made have still not yielded the volumes. And in terms of where we stand, a certain number of air conditioners have been sold over the last 1.5 years. The feedback of the product is good, but the penetration in the market is still not what we want it to be. And that plan specifically is in the January to June period of this year, which is the season period. And in terms of the range that we've rolled out and in terms of the reach that we plan, in this season, we should be able to stabilize the air conditioning sales. If you look at a 3-year horizon, then the potential that we have shared earlier from the AC segment is that the plant has a capacity of 500,000, and that, if you look at it in terms of revenue potential, that's about 1,000 crores. So step one is the realization of the AC potential. The step two under the revenue is related to the reach that IFB has. So in terms of the distribution-led reach, in terms of the reach through directly serviced accounts, which is a breakup of large format retail, multi-brand retail, and also our own IFB stores and e-commerce. Currently, our reach on a monthly basis is roughly about 30 to 35%. And the programs that we are working on over a 3 to 5 year horizon, if you see, they should be reaching somewhere around 60-65% on a monthly bucket I'm talking about. So this is step two.
And so when you say 30-35% of the counters of the overall universe is what you are reaching to today?
On a monthly bucket. So IFB today has about 14,000 counters across India where we are present. And roughly about 30% of that is what we are engaged with in terms of a commercial transaction on a monthly basis.
Got it.
Over a period of 3 to 4 months, maybe much more gets covered, but we are now focused on a monthly engagement. And we've been wanting to do this for the last, let's say 2-3 quarters, but because of the interruptions, etc., it has not happened the way we want it. But a big agenda, which is not 2-3 year horizon, but is, let's say, a 3 or 4 quarter horizon, is to take this 30-35% to 60-65%. So this is step two after the AC revenues. And the third is that in the washer segment itself, in terms of an increase from the top loader segment that we have, where we've been averaging about 20-25 odd thousand top loaders in a month, but with the range, etc., that we've rolled out now, we expect this to go to around 35,000 odd per month in the short term. And keeping the front loader segment, energized with new introductions continuously and retaining shares that we have in this segment. So the 3 major steps would be the AC, the channel extraction, and the growth in the washers primarily through top loaders. There are smaller buckets which are the fourth step, which would be the AC growth that the dishwasher growth that we've been seeing for the last 2 years, the growth from the industrial segment. So these are smaller pieces which complement the 3 big pieces that I spoke about. So if you add up these 4, that would give you basically the kind of revenues that you would expect to see in a stable state, let's say in a 3-year time frame. Does that answer your question on the revenue side?
Yes. So broadly, from a strategic perspective, it does answer the question. And would that translate into, and again, I'm not holding on or wanting an exact number from you, but would that constitute a 20 to 25% CAGR on the existing products plus AC revenues on top?
So I wouldn't put it at 20-25% plus AC revenues. It would be rough. You could expect if we do the channel extraction bit properly, which we have to in any case, then a 20% plus AC revenue is something that we should deliver.
Okay.
And that is the potential that is waiting to be extracted.
And so one more question on AC is, does this include the white label partnership that you have?
Yes.
For half of the capacity?
Yes, both put together.
Okay.
And the second part of your glide path was around the margin side, and this is something that in many quarters we've discussed. And if you see last year in the Q3, we had a very stable sort of a margin profile, much better than before. But from the January 21 onwards, this commodity price increase and being unable to pass this through to the market has been a real problem that we've dealt with. But what we've said is that our internal attempt is to get to a stable 2-digit margin, and that is something that we have to deliver, which is in the current context. That means being able to knock off this material cost impact that we've been experiencing. Partially through price hikes and partially through completing material cost savings programs that we began in around the March, April of 21, which has taken us some time, but these are all about to go into implementation.
And sir, this material cost saving program, does this mean changing the BOM of certain products, or it does mean efficient manufacturing or lean manufacturing methods which would require less wastage?
So it is 80-85% around the material cost profile, which is alternate sourcing and looking at basically areas that we can save money in through value engineering. There is a large amount of saving on the electronic side because of localization and consolidation of purchases of washers and ACs. On the manufacturing overhead per se, our conversion costs are very low, so there isn't much to be saved there. Even though that is being worked on, but there isn't substantial savings there.
Got it.
You had a third point on inventory accounting. I think Mr. Chatterjee can answer that.
And what was the exact question on inventory, please?
So my question was, so does the company operate on a weighted average cost method, or there is FIFO or LIFO?
No, it is for different stocks, different things. Material is on the basis of weighted average, and finished goods is on the basis of finished goods. WIP is on the basis of cost or realizable value, whichever is lower. We go by the accounting standard.
Okay. So, let me ask one more question around this. So, obviously, you would have seen material price inflation through the quarter, and there is a certain cost which have been passed on as a price hike. So, you wouldn't have realized the full price hike for the quarter. So, if I were to take 100 as the base for cost price and say 130 is the kind of price that you would want for the end product, has those two moved in? Obviously, these two haven't moved in tandem. So how much of the price hike, raw material price hike, has been passed, or if those price hikes were to sustain for the entire quarter, how much are still to be passed on?
Our estimate around 4 to 5% is yet to be recovered. because the price hikes are continuous. It is not that for one quarter and it's stopping. So from time to time we are doing price increase. But even now, as of date, we have got 4 to 5% depending on different products. The recovery is still pending. And even in February, we have some plan to increase.
Thank you. The next question is from the line of Bhargav Buddhadev from Kotak Mutual Fund. Please go ahead.
Yeah, good afternoon, team, and thanks for the opportunity. My first question is that in this utilization of 100% in the AC business, maybe in the next 3 to 4 years, what are we assuming in terms of breakup between our own B2C sales and our white label sales?
So if you take a 3-year horizon, then around 300,000 would be the IFB brand sales and about 200,000 would be the OEM sales. This is a tentative breakup.
Sure. And to reach to this 200,000 figure, have we entered into any sign-ups with any large OEM partners, or we are still in the process of doing that?
So we've already begun supplies. However, in terms of a fixed lifting by large OEMs, etc., it is something that is still ongoing. But supplies have started. As a specific answer to your question, as on date, let's say around 50 to 75,000 a year would be something that is more or less sure, and the remaining 125,000 odd is something that we still need to work on.
And in terms of configuration of ACs being sold on white label basis, would it be fair to say these would be primarily premium ACs, meaning 5-star rated ACs, or would be sort of 2-star, 1-star kind of?
It's 3-star, 5-stars, 1.5 ton, 2, all of them. But because of the quality levels that we are delivering, the positioning is above the average in terms of the white label positioning in the market.
Okay, understand. And in terms of when we reach, say, 75-80% utilization levels through a combination of white label and B2C, will there be a significant EBITDA margin difference between both these segments, B2C and white label?
So the EBITDA for the IFB is obviously higher, but the thinking that we had was that the OEM sales helps to dilute overheads.
Yes.
And that volume also helps us to price on the buying side better. So just as an example, an exercise that we've been doing for the last 3 months, which now has to come to conclusion in the 4th quarter, is that if you look at electronics purchases, then combining the purchases of AC and washers together gives us a significant opportunity for cost reduction. And if you look at the volumes of the OEM added to the IFB brand of ACs, obviously the purchase increases that much more. So that is how the OEM would help us. So it will be indirectly reflected as margin on both sides, essentially.
Okay. And as we achieve scale in the AC business, would it be fair to say we'll reduce our MRPs, become more competitive, and by that we'll sort of increase market share?
So our thinking is that if you look at the price of the product that we have today, we believe that the price for the product is right.
Okay.
Even though the feedback from the market is that they would like this to be positioned lower by anywhere between 1,000 to 2,000 rupees. But our communication in the market has been that the value inside the AC is much more than that. And it has taken us time to settle this in the market, but the market has now settled, and the value that the IFB AC should have, I think, is being accepted much more than, let us say, a year back. So the benefits that we will get from the scale up of volumes, we would not like to pass this through in terms of pricing, but we would like this to fix the margins on the business overall. So for our margin story to be properly fixed, getting the gross contributions from the AC segment is a very, very important part of that fix, actually. So I would not expect big change on the pricing side, but The volume has to help the margin. Am I being able to answer this the way you wanted to?
Sure,
okay.
Sure. And my last question is that as we sort of achieve scale in AC, do you see acceptance from your channel partners, mostly these large format retail stores, to significantly improve? Because as of now, we are more so perceived as a single product company. I know that in dishwasher and microwave, we have good share, but these are smaller categories. AC obviously is a large category. So
this is a very important point you've made. And one of the strategic objectives of growing the AC is also that we become in the channel's viewpoint of multi-product partners. So the AC growth will be helpful to the other product categories as well. Your point is absolutely right.
And in terms of market presence, so we are targeting primarily South India as of now to become successful in AC, or we are adopting a pan-India strategy?
A pan-India strategy, and the feedback that we have is much better from the north and the west and also parts of the east. The south remains a challenge to be cracked in the Jan to June period this year.
Great, sir. Thank you very much for your answer.
Thank you. The next question is from the line of Nirav Vasa from Anand Rathi. Please go ahead.
Hello, sir, and thank you very much for the opportunity. So, sir, in the call you mentioned that 4 to 5% is the quantum of price hikes that we need to normalize our gross margins. Would it be possible for you to inform what is the quantum of price hikes taken in 9 months? Hello?
Yeah,
Hello.
Mr. Chatterjee, are you there? Yeah.
You answer.
The total amount that we've been able to take, if I see April onwards, as a result of new model introductions also, would be in the range of about 2-2.5%. And our expectation is that out of the 4 or 5% gap which is still unrecovered, we would have between a 2 to 3% increase in pricing starting this month, and the remaining would be knocked off through material cost savings.
Sir, this number for the 9 months you told it's 2.5%, but if when I compare this number with your peers which have been there the number has been actually in double digits. So any specific reason why our price increase has been much lower compared to other peers?
Yeah, so the price increase has not been double digits actually. It's been back-handed in terms of something which is declared and something which is actually happening on the ground. So if you see some of the major players, till let's say mid of January, there was actually zero price increase.
Mm-hmm. But sir, I am talking of the 9-month period.
Yes, I'm talking from April onwards only. And if you look at the January to March period of the last year, in that period we had made about a 4% increase, which was later followed by others in terms of a declaration, but actually nothing really changed on the ground. So if you see a Jan to December period, you will find a much higher percentage increase.
So what would that number be for the calendar year?
That would be about a 4% that happened in February and March, and another 2.5%. So that would be about, let's say, 6.5%.
Right. And sir, the second point was pertaining to the air conditioning segment. So sir, we have two areas. One is our own brand sales, and second one is contract manufacturing. So like I understand that the pricing is different, but the working capital cycle is also totally different. So wanted to understand, first thing is that what kind of EBITDA margins do we make in our own brand sales and in the contract manufacturing space? Second thing is that after what is the credit period which we give to the brand? And third is that, sir, now that the PLI has come in, so how do you see our positioning as compared to peers who already have PLI benefit with them?
So as far as the working capital cycle is concerned, currently we are operating OEM at either 15 days or 30 days cycle. So between the brand working capital rotation and the OEM rotation, there isn't too large a difference. This is the point one. We wouldn't specifically break up the profit margin between OEM and brand, but the brand is a little higher for obvious reasons. As far as the PLI is concerned, we have participated in the PLI. So we've kept a smaller investment outlay because the largest part of the investment that we made in the AC segment is just 1 year before the PLI, so it didn't qualify. So we have chosen the lower slab, which is a 37 crore benefit over a 5-year period, and whatever was the realistic estimate of the investment to be made, that we have participated in, and we've got the clearance as well. So does that answer your question, Steve?
Right. So that would be for the lower category of components, right?
Yes, that's right. Yes, that's right. So that's in the area of sheet metal, electronics, those areas.
Right. So what would be the revenue threshold that we will have to deliver to meet those, to get those incentives?
I think the revenue threshold was in two parts. One was 100 crore and the other was 200 crore, if I remember correctly. And we've chosen the lower one, basically. So the revenue threshold is not a problem. It will come in any case.
Mm-hmm. And sir, for how do you see apart from air conditioners, how would be your outlook for the washing machine segment in terms of volumes for the next year and other categories? If you can share, it would be really grateful.
So as far as top loaders are concerned, the what I just shared a few minutes back was that we are seeing let's say an average of 25,000 a month going to 35,000 plus a month, which is in the short term. As far as the front load segment in washing machines is concerned, we are overhauling the complete range. The capacity now is about 60,000 a month, which we are upgrading as well, and we expect to be running full capacity basically as far as the next year is concerned. Currently, the outlook on these two is as follows.
And overall industry-wide volumes, if you can share for this category?
Industry-wide volumes as on date, I don't have the figure as on date, but I can give it to you separately if you want.
I'm seeking your expectations because what has happened is that last 2 years, because of COVID-related lockdowns and everything, there was major bump up which was seen across entire kitchen appliances category. So lot of the buying which was delayed was done in last 2 years, and there were also times when there was acute shortage with OEMs. So now wanted to understand now with the scenario getting normalized, what kind of industry-wise growth can be seen in the washing machine category?
Okay, so I will answer it like this: that if you see what has happened over the last 2 years is that the spread of the purchase has increased significantly. What I mean is that the growth rates from the smaller towns, both for fully automatic top loaders and for front loaders, has been high. In some cases as high as 30-35% on a stable base. So if you look at the repeat sales that will come from markets like that, even with normalization, the industry should be comfortably growing in the, let's say, mid double digit rate.
Thank you, sir. My queries have been answered.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Manoj Gori from Equirus Securities. Please go ahead.
Hi, sir. Good evening, everyone. For market share, so if we look at obviously festive season, if I'm not wrong, was relatively muted than what we were expecting or the industry was expecting. And obviously, when we look at the flat revenues that we have reported in home appliances, volume definitely would have degrown. So how would have industry secondary sales panned out, whether channel has lowered their inventory levels, how the market shares have moved, So just a brief overlook, like how the consumer demand pattern that you have been observing, and what's the current outlook, given that there has been some sluggishness during Jan as well. You throw some light on that.
Okay, Manoj. If you look at the market shares, as far as top loaders is concerned, it has remained the same. As far as front load is concerned, there is a slight 1.5% increase that we've seen in the last few months. As far as the customer sales versus company billing is concerned, your point is right. There was destocking in the channel in the months of November, December, and also in January, where the actual customer offtake has been healthy, but the channel has reduced inventory in terms of purchases from the company.
Right. And sir, going forward, if you look at it, like you to have 4 to 5% kind of price hike to normalize levels or decent set of profitability. But given where the crude prices are heading, and probably over last few weeks, other metal prices have relatively been steady. So do you feel like there could be some uncertainty again on the margin front, or probably you will be able to pass it on to the end consumer, and how difficult it would be?
So if you look at where the price increases came from, one was on the electronic side, there was a significant increase, and plastics and metals, there was a significant increase. But plastics has stabilized, and metal, our understanding is that after this quarter it will stabilize. As far as electronics is concerned, it has been stable for about a quarter now. So our personal understanding is that the cycle is coming to an end, and the price increases that we will do starting this month will restore the balance, which has been seriously disturbed since January 21. We don't think that the increases will continue the way it happened in January, June, and September, October of the last year.
Right. And sir, last question. So you talked about the price increases roughly around 4% during Jan-Feb previous year, and roughly around 2.5-3% again. So this is the actual absorption or the actual price hike that you have taken, right?
Yes, that is why I answered that question, saying that something is declared, but something actually is happening.
Right.
6.5-7% is actual.
Yeah. And so, in fact, from the February onwards, from the current month, the 2.5% kind of price hikes are actual price hikes that we have already executed. We have already taken.
No, from this February, over and above this 6.5 odd percent, will be another 2 to 3% that we will take. So, which will take us to, if you compare to January 21, then by the end of this month, we would be up by about 10-11%.
Right. And in that case, sequentially, your margins should improve, or should it be stable? Can you throw some light?
No, the margins should improve because they have been very poor and down from the last year Q3 levels. So we have to get back to that level, Manoj.
Right. And so last question, just so given that obviously sales were under pressure at primary level, so what were the efforts, and obviously the gross margins were under pressure. But when I look at the other expenses, even the employee cost, which have increased from first quarter of FY22, and also as a percentage of sales, when I look at the other expenses, I'm just trying to understand, like, there is hardly any cost saving initiatives that the company has taken. Just in case, like, if we can save at least some portion, like the gross margin erosion that we have been witnessing.
Can I explain?
Yes,
Mr. Chatterjee. Yes.
See, Manojji, our other operating expense, to a large extent, it is variable. Okay, so it is around 84% is variable. The YTD, if you see, we have got around 27% the value growth. So the other areas, fixed expense is around 15% basically. So like Mr. Ray explained in the first stage that in operating expense, we don't have much areas to this thing. And employee cost, of course, because last year was low, because first quarter there was a graded cut.
Right.
And the increment this year has been given. The impact of that, and in few areas, we are adding people to increase AC and washing machine sales. That's all.
Right. Got it, sir. That was very clear. Thanks a lot, sir, and wish you all the best.
Thank you. The next question is from the line of Ramakrishnan from Equities Capital. Please go ahead.
Hello. Good afternoon, sir, and thanks for giving the opportunity. Sir, I have some basic question. One is on the home appliances. For the quarter, we did around 774 crores. If you can give us some breakup, so from washing machine and other AC and all that other products. And that is question number one. Second is on the engineering, again, our margins have come down. Last year, again, were doing 15, 16 crores EBITDA, segmental profit, which has come down to 6 crore. And in the motor also, if you can throw some light, is it the motor is basically for the washing machine or why we are losing money there?
So, sir.
Hello. Yeah, you can answer this, Mr. Chatterjee.
The washing machine quantity, you talk to me separately. I'll give you the breakdown.
Okay.
On engineering part, Arup, I would request you to explain.
Okay. Right, sir, if you can give us a breakup now, that 774 crores, what is the percentage of, I just want some percentage that what is the washing machine and the other product.
That is there in the investor's presentation. I'll tell you. Just give me a minute. The washing machine is around 60%.
Okay.
Washing machine is 60%, AC is 12%. The micro oven is 10%.
Okay.
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 Arup.
So you have any other question?
As far as the engineering margins are concerned,
yeah,
our business in engineering business is related to OEMs.
Okay.
As we have been discussing during this Concall, the RM prices had really shot up, and these OEMs have a policy that is like, for example, the quarter 3 increases comes in the subsequent quarter, and they give retrospective. So all the price increase pending, which is we are supposed to get for quarter 3, will come in quarter 4. So once with the retrospective, the margins automatically will have its impact.
Sir, engineering is mostly that this not chain.
No. It's automotive, fine blanking parts.
Okay.
This is for the engine, transmission, braking. It's for the automotive use mainly, commercial vehicles. So it has a big spread.
Okay. And what percentage is the chain is going to be a bigger percentage of this, or it's
See, chain comes under the aftermarket division.
Okay.
So that has a revenue about 8 to 10 crores a month.
That's small. Okay.
So that's small. The engineering, other business of fine blanking, etc., is much bigger.
On the motor part, sir, it's the motor is captively used the motor, or is it we are also selling outside?
We have both. Anand, please reply.
See, we have two motor divisions. One is the appliances motor division, which mainly caters to the motor requirement of our washing machine division. And the other division is the automotive motor division, which caters to all major OEs like Renault, Nissan, Mahindra, Tata, Hyundai, Maruti, and other people through tier 1 suppliers.
Okay. These are all like a small motor. These are all not DC motors, no?
No, these are DC motors, 12 volts and 24 volts DC motors. We have mainly three categories of motors. One is HVAC cabin cooling blower motor. Second one is the engine cooling fan motor. And the third one is the window lift mechanism motor, which goes into the passenger vehicle as well as small commercial vehicle. Mainly, predominantly passenger vehicles.
Sir, on that, this are we using the BLDC? So do we have plans to move into BLDC motors for the washing machine and all that, because that are all energy efficient?
Yes, within the next 6 to 8 months' time, we will be moving towards BLDC motor for manufacturing BLDC motor for washing machine application as well as air conditioner application.
Then again, this will be internally manufactured.
Yes, it will be internally manufactured, but we will be catering to all other OEs, not only dependent on captive consumption. We will be supplying to other washing machine and air conditioner manufacturers also.
Sir, over a period of time, see what our AC, washing machine and all this engineering, what will be the breakup, like a big picture in next 4-5 years?
See, as of now, 84 to 85% is home appliance, and 15% is engineering. But when it grows, both will go simultaneously. The overall, the percentage may not change much.
Okay, thanks. So all the best.
Thank you. The next question is from the line of Srinath V from Bellwether Capital. Please go ahead.
Hi, team IFB. Just want to understand that, see, the AC business we've had actually kind of had 2 poor summers due to lockdowns. And if we have a complete season where we grow at, say, 5-10% in volume terms from the previous peak, how is the capacity of the overall system? Has there been that kind of capacity addition, and would we by default get completely sold out because there will not be enough supply because we can't import ready products from China? Just want to understand how the market dynamics is right now.
So, Srinath, for the IFB volume projection, or what we are targeting from Jan to June, plus the indications that we have on purchases by the OEMs, we expect that this March, April, May period will be fully packed, which is running at 40,000-45,000 a month kind of a capacity. We just have to hope that there's no disturbance. So for us, being new into the segment with our own manufacturing from March 20, and that first summer disturbed with the lockdown, then the second summer disturbed. So if we get one clean run, I think the factory will be fully utilized this season.
Are we carrying any inventory? Because even if we have 6 months of production, we'll barely hit 3 lakhs. So do we have inventory, or have we been able to utilize the plant through October, November to kind of create some sort of inventory?
Yes, so we've been building up stocks, looking at the market movement from October onwards. So we've built up stocks in November, December and January. And with what the plant will deliver, plus the stocks that we have, we are expecting to have a smooth season this time.
Got it. And on the 6 kg washing machine, we have had kind of, if you look at our 3-4 year numbers on top load, the scale up after we hit 100 crores about 4 years back has been kind of stagnant and trending. So how do you see the top load? Isn't 6 kg is probably like half of the market? Have we cracked a product? Last time you had shared some feedback that we have not been able to kind of fix the profitability at that particular price point. Has there been any solution to this problem, and how are we seeing that? Because I'm guessing without that product, to get to 200 plus crores in top load would be kind of a challenge?
Yeah, so that's a good question. The issue of the profitability remains at that price point, and there are 3 points. One was over the last year and a half, the movement from that 6 kg capacity to 6.5 and 7 has actually accelerated as a result of the pandemic. So the basic 6.5 plus segment has gotten big. This is the first point, which is good for us. The second is that around 3 months back, we had fully ramped up a range of top loaders with heaters as an inbuilt function. And we have been getting very good response. And going forward, we are seeing good volumes from that introduction. The third is that around 4 months back, we began an exercise on a redesign of the top loader for a lower platform, which can go into the segment which is around that 15,000 customer price for a top loader, whether 6 kg or 6.5 kg. And we've been working on the design. We have not committed capex to it right now because we are waiting for the other issues of volume and profitability to be fully fixed. But we would introduce this project into a capex cycle sometime early next year. So with these 3 actions, I think the top loader volume potential will go back to what we wanted, which will be above 30,000 a month kind of a level.
Perfect. So it will be a completely different platform itself to make that, 14,000-15,000 rupee product. So you'll have to kind of completely re-engineer the product.
Yes. And we've been working on the design, and that design is ongoing. So what we decided is that over the next, let's say, 3-4 months, we will finish the design work and be ready. And once we've stabilized the volumes and the margin profile, then we will commit the capex.
Got it. And just a kind of short-term question. In November, December, did we have any share loss or the market itself kind of collapse? And the ancillary question to that would be, where was the demand shrinkage? Was it coming out of big cities, or the trend that smaller cities were growing kind of decelerated? Because, we've seen Google numbers or whatever, they were trending very strong and suddenly they just clicked off. So what was your reading at the overall level in, say, washers or in categories where we have very strong product?
So the market just went down, and I don't think anybody really has an explanation for what happened, but the market significantly dropped in December and November. It was also subdued in January. We have to see what February goes like. As far as IFB is concerned, our total customer deliveries in November, December was higher than our primary billing. So there was destocking in the channel, which for us, I think, is what we can control. The market that it went down, Srinath, nobody really understands what happened. It just sort of switched off, basically.
But this is in metros, non-metros, tier 2. Was the pattern uniform or anything that you read when you saw the data as they came in?
It was surprisingly uniform. It was across areas. Some states were more. For example, Andhra was much more than any other area. But within Andhra itself, it was uniform across Andhra.
Cool. My last set of questions are on dishwashers. It was an area where we aspired to kind of do over. Yeah. Okay, I'll come back in the question. Thank you.
Thank you. The next question is from the line of Gopal, an individual investor. Please go ahead.
Yeah, am I audible?
Yeah. Yes, sir. Please proceed.
Yeah, I have just a question in terms of the description that has happened in the month of January around Omicron. Does that has an effect on the overall sales, or it is catching up in the month of February? That's my first question. Second question is, in earlier quarters, we have, alluded that there is a potential to introduce new product that is refrigerator. So that is still being evaluated, or have we concluded anything on that?
What was the first question, please? I couldn't catch it. Could you just repeat?
The description that has happened because of the new variant. So does that impacted the overall sales in the month of January, February?
No. Okay, sorry. I've got it now. No, the Omicron did not have any impact, even though the numbers have been very high in terms of, let's say, the people getting affected within the company and salespeople, being off the market. The numbers were very high, but it has not had any impact on demand. That is our understanding. And your second question was related to? Could you just?
Yeah, it was regarding the new product introduction. So we were.
So on the refrigerators, it is being evaluated, and I think we will decide this in the Q1 of the coming financial year.
Okay. And there are any capex plan around that?
That will be a part of the evaluation itself in terms of a formal project.
Fine. And the third is not a question, is a bit of suggestion. See, we have seen a good product of air conditioning, but in the e-commerce section, there are a kind of mixed reviews about the product. So if we could have a dedicated team who can address the queries of the end consumer.
This is on which platform, please, Mr. Gopal? Hello?
Mr. Gopal,
Hello.
if you are able to hear us, please do respond. So seems like we lost the connection for the current participant. Okay. We move to the next question.
Did you catch? He was suggesting that we respond better on a social platform. Did you catch the name of the platform that he was speaking about?
No, sir.
Okay.
I'll move to the next question. It is from the line of Aviral Jain from SG India. Please go ahead.
Yeah, thank you so much. I had two questions. One was, what's the realization difference, obviously cost of, on a like-to-like basis for a particular AC model? You would, the company realization on under IFB brand would be a certain factor above the OEM realization. So essentially I wanted to understand what is the manufacturing margin purely as a OEM white label supplier on the AC side. Not percentage margin, but what is the realization difference between for a like-to-like product?
Mr. Chatterjee, would you like to answer that?
The realizations are not comparable, basically. They take from the factory gate. Okay. And sure. The sales promotion expense all are different.
Got it. Okay. Understood. And second, on the e-commerce side, is there a differential market share? As in, does IFB have a better market share on Amazon, Flipkart, the marketplaces, online marketplaces, or is it uniform across what it has on the offline channels as well?
So if you look at front loaders, our market shares on e-commerce are slightly higher than the offline. If you look at top loaders, our market shares on the online are lesser than the offline. In the case of microwaves, it is similar both online and offline. In the case of dishwashers, offline is higher than online. In the case of AC, it's both the volumes are very small, so I don't think the comparison would be very high. Does that answer your question, please?
Yes, and arguably e-commerce would be growing faster given they are providing a lot of convenience and also sometimes a lot more discounts to the customers.
So that used to be true till last year. This year, we are seeing both at similar levels because many markets in the offline space have been growing very rapidly actually, especially the smaller tier 2, tier 3 cities. There is a lot of growth coming and that is offline growth, not online growth.
Okay, got it. Thank you, sir.
Thank you. The next question is from the line of Manoj Gori from Equirus Securities. Please go ahead.
Sir, follow-up question.
Mr. Gori, may we request you to move to a better reception area, please? Your voice is breaking up.
Is it better now?
Yes.
Yes. Yeah.
talking about some of the brands that we have been associated with. Any new brands that we have tied up for the upcoming summer season? And what's the visibility on the OEM volume? Obviously, for the branded, there would be limited visibility. But any commitments and what's the visibility of the room AC OEM sales?
So we haven't added any brands, Mr. Gori, but we have to just service the ones that we are associated with. And the indications would be a Jan to June period of somewhere around 50 to 60,000 basically.
Right. So we have a fair bit of visibility on the OEM sales. Is that understanding correct?
So fair in the sense that these are indications, but these are also not firm commitments to lift. So both for the IFB brand, we have a volume build up, ground up, and OEM based on their indications, but both are subject to lifting. So I wouldn't call it a absolutely fixed volume in that sense.
Right, sir. Got it, sir. Thanks a lot, sir. That was the only question.
Thank you. Next question is from the line of Srinath V from Bellwether Capital. Please go ahead.
Just want to get some maintenance data out. Could you kind of give e-commerce contribution as a percentage? The second data would be what is financing contribution as a percentage of top line, as a percentage of sold. These two data points, could you please share?
Mr. Chatterjee, would you like to answer that?
Yeah, the e-commerce, as of now, it is 20%, but in some point of time, it is higher. But average till YTD figure is around 20%. And the financing is also around 21 to 22% of the top line.
Okay. But that seems to be pretty constant between 20, 25 in that range.
The e-commerce you are saying or the financing?
No, the financing.
Yeah, it is
there for like 2-3 years, I think.
It goes up.
Got it. And the last data point, sir, could you share the contribution from IFB points to top line? Is it about 12-13% is my guess, but anyway.
Around 14 to 15%.
Okay, perfect. Thanks for the data points. And just want to get one question in on dishwashers. How do you kind of see this category now that looks like we are coming to the end of the pandemic? Do you still think this is a category where we can consistently kind of do over 100 crore sales, 150 crore sales, and how are the market dynamics, as we stand now?
So if you look at the dishwasher segment, after the rise last year, it has dipped. And currently, we are averaging about 3,500 dishwashers a month. But our understanding is that the placement of the dishwasher across the major counters is still low. So we think that we can do anywhere between 6,000 to 7,000 consistently per month of dishwashers. And if you take that on an annualized basis, it is much more than 100 crores actually. So that is the short-term target that we have on dishwashers.
Perfect. And the last one, yeah, please go.
If you take, let's say, 70,000 dishwashers in a year, then this is more than a 200 crore business.
Perfect. So that would be the kind of target over 2-3 years as we kind of. And are we looking to manufacture this product because we would be the only person to do it? I don't think everybody is being importing it from Turkey, is my guess. Is there a case to manufacture? Would we be able to kind of get better cost matrices or control of product?
See, right now, no. But if our volumes cross 150,000 a year, manufacturing will make sense. So it will take, I think, maybe 2-3 years for us to get to that sort of level.
Okay. So as we get consistency in the product category, then we can look, because I'm guessing there'll be OEM opportunities also there.
So without the OEM opportunity, if we reach a level of 10,000 a month, manufacturing will make sense.
Perfect. The last one is on microwave. Just want to understand what is the update, our new product range, which is more for cooking. rather than reheating, and what has been the broad feedback? How are the growth of that particular range or contribution of that range to top line, and any mix changes in the microwave space that you can share?
So we went commercial just last month, Srinath, and the first 1,000 units was introduced, and we started from the north. During the field trials, there was a lot of positive feedback around the way that product had come, and we are looking forward to scaling this up. But it will be, let's say, the Q1 of the next fiscal year where you really see a full spread of that, and then we'll be able to gauge the market feedback. It just went commercial last month.
Perfect. Let me check out the stores and we'll share my feedback too. Thanks, yes, thanks a lot. Absolutely insightful.
Yes.
Thank you. As there are no further questions, I now hand the conference over to the management for their closing comments. Over to you, sir.
Thank you, everybody, for joining the call.
Thank you. Ladies and gentlemen, on behalf of Nirmal Bang Institutional Equities, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.